Hello, everybody. Welcome to Thursday. The S&P 500 was up a grand total of 0.03% today, which ironically was actually a bit of an accomplishment. Was down in the morning because of the report that we got from wholesale inflation, what they call PPI, Producer Price Index report, came out today. It was up 0.9% for the month. So if you take that and said, okay, what if that happened all 12 months? You'd actually have a 10.8% increase in wholesale prices. And so this is usually the precursor to, what we start to see coming through in the CPI and the PCE, the normal inflation reports, increase in prices and such. So then, it'll be interesting to see what happens. So if you see, the manufacturing surveys, the very beginning, they start to answer, yes, their prices are going up. We saw that, a couple of months ago. Now we're starting to see wholesale prices increasing. And so if wholesale prices increase, do the companies that are kind of the end sellers, do they increase the price to the consumer? So we'll be able to see that, over a period of time as far as that goes. But it's sort of like watching it come at us as far as that goes. So that's a pretty big number, actually. And services, interestingly enough, are actually up 1.1%, which theoretically aren't directly impacted by the tariffs as far as that goes. But we've seen that in a couple of different reports that we're seeing pretty high inflation in the service area. Because again, if you multiply that times 12, you're at 13%. Is that right? Sounds right. So, per year. And so again, you got an average tariff of 18.6% right now. How much of that ends up coming through to U.S. companies and U.S. consumers? That's what we're waiting to see. So far, what we've seen so far is that it's hitting companies more than consumers. Companies are kind of eating some of those tariffs. And we'll see if that continues, or do they start to pass those along? I suspect they'll have to start to pass those along. In some cases, they're not going to lose money on something just to not raise the price. Once, price starts coming up, it'll give everybody cover to maybe do that. And so this is the big concern. Of course, the market is expecting, a rate cut. As I said yesterday, 100% chance of a rate cut, of at least 0.25%. And out of that, 6% of that is a guess that we'd have a rate cut of 0.5%. Well, today that changed a bit. Now we're down to 93% rate cut for a quarter, and no more feeling that there'd be a 0.5 point rate cut. So this is what's going to happen as we start to see this data come through. We're going to get these job reports. There'll be some other inflation reports that are coming out before the middle of September when they have their meeting. The Jackson Hole meeting is what they use in August. A kind of bunch of different Fed governors come in, and they'll do a speech on the 22nd of this month of August from Chairman Powell. It'll be very interesting to see what he says. Does he push back on this concept of drastically lowering rates, especially since we're seeing some inflation, at least in the wholesale area, or not? Again, they have a dual mandate, trying to keep unemployment low and try to keep inflation low. Those can sometimes conflict with each other. And at the moment, they could both be happening, and the Fed's going to have to decide what they want to do in terms of the rates. So the market did quite well today. Again, every time the market dips a little bit, people are coming in and buying. I think that the expectation for rate cuts is what's driving things now the most. Historically, they have a concept called "don't fight the Fed." So if the Fed is lowering rates, the stock market generally goes up as far as that goes. Sometimes, though, that isn't true because they're lowering rates because things are falling apart, like in 2008, and the stock market was down quite a bit 12 months later after lowering rates. So that's where we need to see some of the impacts that are happening from some of these tariffs. And those types of things to see, whether or not we're going to be in a good spot when they lower rates, kind of like we were last year. The market responded quite nicely to the lowering rates, and they ended up, with a 20+% rate of return on the market as far as that goes. Or is this rate lowering regime going to be because we're having trouble that's going to eat into earnings at some point in time? So I'll have to wait and see how that works. So, okay. Anyway, that's what's happening today. Again, not a bad day. Market did pick back up there, got up, to where it started at least, which is pretty incredible considering how big that inflation report was, at least in my opinion. So we'll see how this plays out tomorrow. So again, we have the show tomorrow. You can come on YouTube, Talk Money with Tom at 12:15, Pacific Standard Time. And you can ask questions live and what have you too. And I'll do a little summary of what I saw happening for the week at the beginning of the show. So look forward to seeing you then. Thank you very much.